This is Matthew Cratter from Trade University, and today I want to talk about some news regarding BlockFi that broke over the weekend. It looks like the original shareholders are about to be wiped out, and that things are just as bad at BlockFi as we suspected. BlockFi, of course, is the crypto lending platform that has recently run into troubles. I theorized a couple weeks ago that the same forces that had just taken down Celsius were at work on BlockFi and that we were essentially experiencing a bank run there. This turned out to be true. BlockFi then was in negotiations with FTX to get this emergency loan for $250 million. And this is presumably was to enable it to process withdrawals of people who wanted to take their funds off of BlockFi. And one of the things I pointed out in a follow-up video is that there was some very weaselly lawyer language, and there was this question of whether your funds held at BlockFi would be ahead of FTX and Sam Bankman-Fried. And the argument I was making was, even though BlockFi is spinning this as a very optimistic thing, that this is a strategic decision they're making in a new partnership with FTX, what the argument I made in that video was you don't need an emergency bailout if everything is just great. And if a company is telling you that everything is just great when it's not, this fundamentally erodes the brand and should erode your trust in the brand. What I argued then as well is that BlockFi was almost certainly insolvent. In other words, its liabilities were greater than its assets. And what this meant, and what this still means, is that if everyone tries to withdraw their crypto or their Bitcoin at the same time, they would not be able to do this. It turns out that the situation is indeed this bad. There was a call that was leaked, and CoinDesk just reported on this over the weekend, that the context for FTX's credit facility, in other words, this loan that they're willing to give BlockFi, the requirement was that it would completely wipe out all current shareholders, all current equity in BlockFi, and of course FTX would step up and take ownership of the company. So this was, you could see it as a hostile takeover of a very weak company that was in the process of a bank run. This article goes into a little more details, talking about this conversation that Mark Yusko had, who's one of the founders of Morgan Creek, basically saying the FTX credit line had a catch for BlockFi's existing shareholders. It gave FTX the option to buy BlockFi at essentially zero price. If FTX and Sam Bankman-Fried were to exercise said option, it would effectively wipe out all of BlockFi's existing equity shareholders, including management and employees with stock options, as well as all equity investors in the company's previous venture rounds. In other words, if you're an employee there, even if you're senior management, if you're one of the founders, it looks like your stock was or is going to zero if they have to accept this FTX offer. And what Mark Yusko and Anthony Pompliano, were working on over the weekend was trying to raise equity in order to offer a different deal. They're trying to raise $250 million in equity to invest in BlockFi, and so they could avoid the FTX deal and not have to have their shareholder equity wiped out. And the article goes on to say, however, Yusko said on the leaked call that BlockFi founders Zach Prince and Flory Marquez had a valid reason for preliminarily accepting the terms of the several emergency financing offers. And again, this is obviously was an emergency financing situation and probably still is. Of all these offers that BlockFi received, FTX's was the only one that would not subordinate client assets to the rescuer. In other words, some of the other bailout packages that were offered would mean that users of BlockFi, retail customers like yourselves, would have to take a haircut. So maybe you'd only get 60 cents back on the dollar, whether that would be a US dollar or a crypto asset. Probably your US dollar holdings there would come under FDIC insurance. It's a little bit unclear, especially if they were held as stable coins. They probably would not. So this article concludes, in other words, unless BlockFi went with FTX, its depositors would have had to wait in line behind the new lender to be repaid. So this continues to be a very serious situation at BlockFi. This is why Zach Prince did use this Weasley language last week that we talked about, that the proceeds of the credit facility, in other words from FTX, are intended to be contractually subordinate to all client balances, not that they were, and this shows that the deal was still being discussed. The thing that I thought was very fishy and continue to think is not the best way of doing things is BlockFi puts out this very paternalistic tweet talking about this may be your first experience with major market volatility. This is a tweet being put out by a company that just went insolvent because they don't understand how to deal with the matching of their assets and their liabilities, and they basically just got blown up by the crypto market. So it's fun to see them lecturing retail investors about how to better navigate this. The other thing they say in the same tweet thread is the best time to raise money is when you don't need it. While markets are volatile, the FTX deal was a strategic decision on our part to further bolster our balance sheet and reinforce our commitment to serving clients. This, in my opinion, is not true. I'll leave it to the lawyers to decide. This was definitely an emergency bailout, and they definitely needed the money. It was less a strategic decision. You don't make a strategic decision and you wipe out yourself and all the other shareholders. This was really an emergency deal. And as such, until this gets resolved, if you're holding anything on BlockFi, you should be worried and you should consider withdrawing it in the interest of your own safety. I'm not trying to create a bank run here. The bank run has already happened, and hopefully they're able to come through with some sort of financing that saves client holdings at BlockFi. But if they're not able to raise this money, enough money, and have it subordinate to client accounts at BlockFi, anyone who still has money there will almost certainly take a haircut and not get the full amount back. In other news I wanted to cover, people have been asking me what I think about Goldman Sachs raising money to buy the now bankrupt, almost certainly bankrupt Celsius and their assets. I thought this was interesting. This is sort of trying to raise a vulture fund. The one thing none of these articles say is that Goldman Sachs will be using their own money. This is classic Goldman. They're very happy to use your money and take a fee in order to try to buy some of these raise a vulture fund to buy these bankrupt assets. So again, if I would certainly not invest in something like this, especially if Goldman wasn't using their own money. But this is Goldman Sachs. If you want to get in the snake pit with them, you have been warned. Finally, I want to finish with a great tweet from Ryan Selkis, talking about basically what's been happening to every crypto lender. Ryan says, I'm not sure if CoinDesk can comment on Genesis, but it does look like 3AC, in other words, 3 Arrows Capital, which was this big crypto hedge fund that blew up because they had most of their money in the Terra Luna protocol. It looks like 3AC will wipe out BlockFi, Voyager, Celsius, and likely all of Genesis' lifetime revenue. Fortunately, they have the Digital Creek balance sheet behind them. Every major crypto lender gone. So this is really unprecedented. The nice thing about this is there are not going to be any government bailouts. This all falls on private shareholders, the backs of people like Mark Yusko, and Anthony Pompliano. But this really should make you think twice about not your keys, not your coins, and where you're holding your Bitcoin. Is it really worth the extra 1 or 3% yield on Bitcoin to risk losing a substantial portion of your Bitcoin? My argument remains that you should hold your own private keys, withdraw your Bitcoin from an exchange, don't use any of these crypto lending services, at least for now, and especially it's in these Bitcoin bear markets that becomes even more dangerous, because as you get this market volatility and as you get these bank runs, you get contagion, and it's really the worst time to be on these platforms. In my opinion, you should always be holding your own private keys, because it's very hard to predict when things are going to blow up and when you get this sort of daisy chain of insolvencies. I have 2 free videos here that I want to link to. I've referred to them a lot in the last couple of weeks, but I think it's really important to go through here. If you're not holding your own keys, if you're not holding your Bitcoin on a hardware wallet in single sig, or using multiple hardware wallets in multi-sig, you really are risking losing principal and missing out on the huge appreciation that I think is ahead for Bitcoin. When you have an asset that goes up 100%, 200% a year on average. There's no reason to try to derive yield from it, at least at this early stage. If there's a way of doing it where you get to hold your own private keys and or at least a couple keys in a multi-sig, and you can be sure your Bitcoin's not being rehypothecated. In other words, it's being lent out to someone else who lends it out to someone else, etc. And you have this whole problem in case you need to recall the Bitcoin and get it back. But unless you're using a service like that that doesn't rehypothecate, I know Unchained Capital, I believe they don't rehypothecate their Bitcoin, so that might be a place to take a Bitcoin loan. But I don't think they offer interest or yield at this point in time. Unfortunately, a lot of people are going to have to learn the hard way about self-custody and how not your keys, not your coins. You shouldn't be storing your Bitcoin with another custodian because you risk losing the principal of it. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.